Hi, thank you, Trevor, for the introduction. Just want to do a quick sound check, make sure everybody else can hear me okay. And you should be looking at a title page using volume profiles in MarketDelta to help form trading ideas. Okay, excellent. Right, we'll get into this. I'm planning to talk for about an hour and 15 minutes or so. And I've got a few slides to go through. We're going to some charts and talk about applying the ideas that I'm speaking about, so you guys can see how the ideas can be created using the level of understanding that I provide through the presentation. So it's a little bit of theory, a little bit of an explanation to provide a foundational understanding of auction market theory and profiling concepts, without making it too complicated, and I want to make it easy to understand. I think if you can really understand the basic concepts that I'm going to cover today, you've got a good foundation and a good base to create ideas, trading plans each and every single day, which you can have a little confidence in. Obviously, through experience, your confidence grows, and there's no doubt about that. So I don't expect to give you the complete belief and confidence that you need in these ideas, but at least a little nudge and push in the right direction, so you can at least get yourself started with these ideas and put them into practice, more importantly. And my whole ethos is about helping traders create their own ideas, become who they are, and express themselves through their own personality, their own character, and not try to necessarily mimic somebody else. My whole ethos, my whole idea when I coach and train others, it's not about trying to be me and do things exactly the way that I do it, because everyone's goals and objectives are slightly different, and everyone's in a different place at a different time. So for me, my focus has always been, when coaching, training, and providing presentations like today, this kind of webinar, is really helping people understand the why, understand why it makes sense to see the market this way, why it should form a part of your foundation when it comes to creating your ideas for each trading day. So firstly, I just want to talk about discretionary trading in general. I'm actually a proprietary trader. I've been trading props since 2005. I got into trading itself in the futures trading business in 2001. So I've been in this business for quite some time. And, you know, I've come across all sorts of traders during that time when I've been coaching and training. And, you know, the prop trading world is the proprietary trading world, if anybody's new to that, has opened my eyes to, you know, the other side of this, the professional trading world, and how traders in that environment also work as well. And you know, that's you know, something that I focus on a lot, especially the risk management side of things, and the kind of ethos these professionals have, and I see myself as one of them. So my idea today is really just to open your eyes, soak it in, take in what I've got to share, make of it what you will. It's not a specific setup as such, or a way of doing business as a system kind of way. It's about understanding the market in a certain way, and that's what I believe auction market theory allows you to do. And profiling is really about using that level of understanding to help form your own opinions and ideas about the marketplace in the current moment, the way you perceive it. The webinar is being recorded by Trevor, MarketDelta, and also by myself, so there will be a recording available if you can't make it throughout the full presentation. Okay, now, if you want to check out the website, it's L2ST.co.uk. That's L from Lima, the number 2, S for Sierra, T for Tango.co.uk. Check out the website if you like. And as I said, I'm a prop trader myself, and also I'm involved in coaching and training other traders. And L2ST has actually been formed since 2005 as well. and I've been helping coaching traders and training and helping support them and guide them in the right direction. Of course, as a coach and as a trainer, I've also grown and I continue to grow as a trader and both as a trainer. So, you know, what I'm going to share today is an understanding that I've gained over my years of experience in the trading business, applying auction market theory, profiling concepts, and I hope that experience can come across in such a way where you can make use of it and use it in a way that will help you guide yourself as a trader as you move forwards in this business and create your own path in this trading business. Right, let me just get through the disclaimer, just get this out of the way. L2ST does not have any knowledge of the trading needs, objectives of individual viewers of this presentation. This presentation represents suggestions, training, and information for viewers to use when evaluating and making trading decisions in light of their own individual trading goals and does not constitute specific advice. L2ST does not take into account the trading objectives, financial situation, needs of any particular person, and before making a trading decision on the basis of an L2ST method of trading, the prospective trader needs to consider with or without the assistant advisor whether the advice is appropriate in light of their particular trading needs, objectives, and financial circumstances. Trading the future market is involved with risk, money can move lost and made. I'm sure you guys have heard all that before, but I just want to make it clear that I'm not providing any advice as such here. I just want you to just open your minds, take it in, but make of it what you will. You know, put it into perspective and see how it fits into where you are right now and what you are looking to potentially achieve out of the marketplace. I'm sure people are here from all walks of life. Some of you guys will have more experience, some of you guys less experience. So I'm going to try to break into some of the basics, and I think if you have a very good understanding of the basics of auction market theory and the auction process, I believe you are in a strong position to be able to make use of the profiling concepts. Now, you'll be surprised at how many traders that I've worked with in this business over the years that have actually got a lot of experience time-wise in profiling auction market theory, but have a different understanding of it. So firstly, what I want to put across is that you probably have, you know, the fact that you're here via MarketDelta or L2ST, because you've received an invitation to attend this webinar, I'm assuming you have at least some exposure to auction market theory and profiling. So, you know, although this may seem basic, what I'm going to go through, you'll be surprised at how many traders that I've worked with, profiling guys, auction market theory guys, some of them even more experienced than me, working with these tools, but have a different understanding and in a way, in a sense, sort of overcomplicated things as well. So what I want to do is sort of just take all the BS out of this and just make it really clear, easy to understand, and at least help you understand the way that I see it, and it makes the most sense for me. So this is a personal thing, but I want to put across in a way that it may begin to resonate with you guys as well. So I'm hoping that's going to be the case, and you know, let's see how it goes. The auction process, let's talk about this. The auction process can be explained in many different ways, but let's break it down into its basic, foundational level of understanding that you need, that I believe, really, if you can see it this way, you can see stuff and make sense of it in a really simple, logical, easy to understand, common sense way, which will allow for you to gain some belief in what you understand. Because it's common sense, it just makes sense for the market to do this. Okay, so the auction process. The market does move up and down. I'm sure you guys all know the price moves up, it moves down, it moves up until either the buyers stop showing interest at higher prices, or when it's moving down, the sellers stop showing interest at lower prices. Firstly, the auction and the way the market trades, it is a zero-sum game. For every buyer, there has to be, for every buyer that wants to lift an offer, for example, there has to be a seller on the offer. There has to be an offer available. For every order that wants to trade on the bid, there has to be a bid available. So it is a zero-sum game in that sense, on a very short-term focus. But there are these institutional players, these longer time frame players, and that's really what I try to align myself with. So although you can use these concepts in many different ways, you can use them on a very short-term level and it will still show the same kind of things that I'm going to show today. But you'll also find from a longer time frame perspective, at least that's the way that I like to see things, using a top-down approach. You can start to see where longer time frame players, and the longer time frame players, I refer to them as the institutional investment banks, the hedge funds, etc. The people that are going to pump lots of money into the marketplace and actually create some movement that's actually going to lead to some good risk to reward opportunities. Now the market will play out smaller opportunities, some more significant opportunities, some less so, and some are going to be smaller moves, some are going to be bigger moves. I think a lot of it comes to the fact of what perspective you're taking, right? So if you are taking the perspective of a longer time frame player, meaning you are focusing on longer time frames when you look at candlesticks, etc., or you're looking at profiles that are built over a longer period of time, I believe then you start getting to the mindset of the longer time frame, sometimes known as the other time frame player. So we're trying to establish what the institutions might be able to do and create in the marketplace beforehand. Okay, so the market does require, to some extent, some assumptions and some beliefs in order to be able to create ideas. Now, these beliefs and ideas that you do create are not necessarily truths. Like the way that I look at the market and what I'm going to explain today, I want you guys to see these as beliefs. These are opinions. These are my opinions of how the market works based on my level of understanding of auction market theory and the profiling concept. Now, what I urge you all to do is not necessarily just take it on as it is and say, okay, now that's my beliefs. I want you to listen to what I have to share and say, okay, well, if that's the case, let me test this out. Let me move on from today's seminar webinar and let's see how this information proves itself to me as I move forward and progress as a trader myself. So that's how I want you to take this on. That's what I had to do myself with the profiling concept. Now with the profiling concepts, a lot of them can seem overly complex at times to understand. And I remember when I started to get into profiling and to understand auction market theory, it really didn't make a lot of sense until I just sat there for days and weeks on end just watching the profile develop and just seeing what's going on. Now I probably read the right stuff, it just didn't make sense because I didn't understand it. Or in a way, it wasn't explained to me, or I didn't read it in a way which made sense at that particular time. Now, with experience of applying these concepts, I can see things much more clearly, and now I know what's important and what's not. So that's what I want to share with you guys. Now, the auction price is very simple. As I said, the market will keep moving up as long as the buyers show interest. The market will keep moving down as long as the sellers show interest. Now, the degree of this interest is what's going to actually drive the market. As we know, it's a zero-sum game. So the buyers have to keep showing interest at higher prices to keep moving it higher. They have to keep sequentially showing interest at lower prices to keep it moving lower. So that's the basics of the market. You know, price moves up and it moves down. Price moves up until the buying dries up, and it moves down until the selling dries up, and it moves up again, etc. Okay, it happens in many different ways, but that's the basics of price action from an auction theory perspective. Now, the other thing auction market theory teaches us is that the amount of time the market spends at selling prices, or the amount of volume that transacts at those prices, defines which prices are actually being found to be fair. Fair meaning that people want to do business there. They find it fair, and that's why they will trade there. So it's sort of like it's two-sided, because where acceptance has occurred in the past, where the market has traded volume, and I'm talking about volume at price, talking about profiling concepts. So if you look at a profile, it will have distributions like this. I'm just showing on the screen here. Now, the higher volume areas, or areas where the price spent time moving sideways, those are the areas of acceptance, okay? Or those are, we are assuming as auction market theory profile traders, are the fairer prices. Now you've got to take these ideas on as your beliefs, because you're going to trade your beliefs and ideas about the marketplace, okay? So if the market is spending time there, it's transacting volume at those prices. It could be a range of prices, it could be one price in particular, but it's usually a range of prices. Again, that range of prices you see of particular perception of being fair, okay, it's dependent on what kind of time frame you focus on. Whether you're focusing on a shorter time frame, looking at lots of smaller distributions, or whether you're looking at a wider time frame where you see wider distributions, which may be lasting days, maybe even weeks. Now, shorter distributions might be, say, for example, lasting half an hour, hour. So it'd be the intraday distributions. Now, you'll see fairer prices being defined from a shorter term perspective, a medium time frame kind of perspective, and a longer time frame kind of perspective. Actually, from many different perspectives, you'll see fair prices. But what you've got to be able to perceive this is basically fair prices from that perspective, right? But now you've got to be able to figure out, what are your objectives? What are you looking for personally? You know, are you looking for a small move here, which you want to be in and out of within minutes, or do you want to be out of this move? So are you looking at a slightly longer term perspective like I do? I look for like 1 to 2 major swings intraday. I like to get positioned in the trade, work around that open position. You know, if I get that trade right for the day, that's basically the intraday swing position trade for me. And if I get it right, I shouldn't really need another trade. There's 1 or 2 of those mainly setting up. I say 1 or 2 mainly because sometimes when it's a bit more volatile, you'll see a few more situations. Okay, so you will find the market will define these areas of fair prices. Okay, now the lower volume areas, or the areas where the market doesn't spend a lot of time or doesn't transact a lot of volume, is what defines the unfair prices. Okay, so these are the ideas that I want you to firstly take on as the foundational beliefs that you take on, and you've got to believe in this fully, completely. If you want to be able to trade in this way that I want to try to show you guys today, this is the way that I trade myself, you've got to believe in this, and you've got to believe it so much that that's exactly what you're going to focus on, and you're not going to think anything else otherwise. Now, not to the extent where you're overconfident and you expect the market to do only that. And this is the thing that throws a few people, because they look for perfection and they want something that works all the time. You're looking for something that's consistent here, something that's going to happen a lot of the time because it makes sense and you can believe in it. All right, because that's going to give you the foundation in order to break those subconscious, unconscious tendencies to break your trading rules, your setups, etc. Now, if you come from a perspective where you understand the market in such a way where it makes sense, it's common sense, it becomes a part of your core belief structure. Then, when in the moment you see those things setting up, you're in a place where you can actually make sense of those opportunities in such a way that you can believe in them, you can have confidence in them. And now, if you come from that perspective in the first place, you are in a much better position than most traders. Now, most traders do get involved in trading with systematic mechanical methods that they actually don't quite understand. They don't really know why they've got to do business there, why it makes sense, but they do it because maybe there's a back test or a system or something that's defined that they should do that. It just makes sense, right? Now, from a discretionary trader perspective, it's very different. Discretionary trading is not systematic mechanical trading. So that's the first thing as auction market theory profile traders. If you guys are new to it, you've got to understand it's not systematic mechanical trading. It's about understanding the marketplace as an auction, firstly. Once you've understood it's an auction and understood what fairer prices are and unfair prices are, then you look for those fair prices and unfair prices. If you can understand that and understand what the unfair prices mean to you and what the fair prices mean to you, you can then create the ideas that I'm going to share with you. Okay, so I just want you guys to understand that firstly. I'm going to break it down in a lot more detail. Okay, but this is the basis of the auction process. Now you can make it much more complicated. When I learned auction market theory and I began to understand it, it was not explained in this specific way, but these became the most important concepts for me. Okay, and in a way, this is all I need to understand from auction market theory. This is all I need to really understand, is that the fairer prices are defined by where the market spends time and trades volume. The lower volume areas and where the market doesn't spend time or doesn't like to spend time are the unfair prices. All right, so two key points there: fair prices and unfair prices. It's a perception of market participants. Now, when you're reading the profile and you're looking at auction market theory, you're reading the auction as something that you're looking into in such a way you're trying to figure out what the behavior of market participants is. All right, the typical behavior of market participants. Now, this doesn't mean they're all looking at the market in the same way. The likelihood of most traders out there looking at the market in the same way is quite unlikely. What you're doing here with auction market theory and profiling is looking at the market in a certain way that begins to look into the mind of the market itself. It begins to define the market in a different way other than price. So it's not just price. You now have time and you have volume. Those are the main three variables that all traders use. Okay, but we use volume and time in a slightly different way because we put it on its side as profile traders. So we look at how much time the market is spending at prices, rather than, you know, how has price moved over time. You know, that's the typical TA technical analysis methodology. You know, we look at how price is moving over time. But what we're looking at here is how much time is spent at particular prices, or how much volume or transactions have taken place at specific prices. All right. Now, once you understand that, the idea, the belief you've got to take on here, okay, to make sense of this in a way that you can believe in it and be confident to take opportunities based upon these ideas, is understand this real simple idea right here. The market balances around fair prices and moves away from unfair prices. Right? This is so important. If I had auction market theory and profiling explained to me in that one sentence alone many years ago, I mean, I probably read it somewhere, but I didn't understand it the way that I understand it now. But if you fully understand what that means, you can be so creative with your ideas and the profiling concepts that it's unlimited what you can try to achieve out of the market. You can fulfill the objectives of a scalper. You can fulfill the objectives of somebody that wants to be in the market for 2 different targets, 3 or 4 different targets, maybe be in a trade for like 20, 30 minutes, maybe in a trade for half an hour, 2 or 3 hours, maybe even longer. That's the kind of time frame I like. I like to be in a trade typically longer than half an hour, up to 2 or 3 hours, sometimes even longer. You know, those moves keep going. And that's what I try to align myself with, and I'll show you how I do that in a little while. Okay, so just to understand this, firstly, the higher the time or volume at price, those are the fair prices. They're proven to you by the market. That's what's being proven by the marketplace as it unfolds. The fair prices are being presented to you. The unfair prices are being presented to you in real time and over time. You can go back months and weeks in the past. You'll see what was fair, what was unfair. You'll see intraday what's fair and what's unfair through when the market spends less time there and transacts lower volume there. So the lower volume, again, just to recap, lower volume and where the market spends less time is the unfair prices. Where the market spends more time and trades more volume is the fairer prices. Now, the market balances around fairer prices and it moves away from the unfair prices. Keep that in mind. Let's move on. Next concept that I'm going to talk about is acceptance. Now, this is perceived as volume building at price or the market spending time at price. Two different things. Now, traditional market profile, we would look at time or time price opportunities. And I'm going to show you those. And typically, most people get into auction market theory and profiling through this journey, which I call it. They go into auction market theory, they go through Stoudemire's work, fantastic work, and of course, he's a pioneer of market profile. So, you know, a lot of respect. You know, he has his own way of teaching this and trading with it, I suppose, as well, right? And now you have James Dolan, fantastic book, Mind Over Markets. I've read that, makes a lot of sense. Now, I struggled with it a little bit initially because of all the terminology and the TPO focus, the time price opportunity focus, but it provided me at least a good foundation to work off. The ideas are the same. The more time the market spends at a particular price, that's with time price opportunities, it's acceptance. When it spends less time there, it's rejection. Now with volume profiling, which is what I focus on, the more volume builds at a particular price, it's more acceptance. It's the fairer prices being proven to you as the market unfolds, and it's been proven to you in the past. And then in the future, as you continue to use those ideas, you begin to use those ideas to anticipate what's going to happen next. And this is the key, because to anticipate is to participate in the market business. You know, the trading business. It's all about participating, but you've got to anticipate to participate, right? So, perceived as acceptance is perceived as volume builds at price, spends more time at price. It often leads to the market moving sideways in a range. So there's a few things you can take from this. Firstly, if you're trading back into acceptance, you can expect the market to go into those areas. So I'm just drawing some arrows here. Let's draw them in blue so they stand out a little bit. So market goes down here. Let's say it's been trading in this range. And I'm going to show you some examples on the charts. Market goes down to this low volume area. We're trading right down there. Well, firstly, you can sit there and say, okay, well, there's a low volume area, a rejection area, which I want to go to in a bit more detail. And, well, we're now out of where we was accepting. The yellow rectangle highlights where acceptance was, or at least where I perceive it. So we can sit here and say, okay, well, the market should go back into that because that's where the market has proven acceptance was. Really basic concept. Now, what often happens is when the market goes into these acceptance areas is that it moves sideways. So it has moved sideways and has already transacted volume there. But whenever it revisits these areas, it typically moves sideways again. So this is the assumption we've got to have. This is the belief we've got to take on. Okay? So this is what I want to put out there. Acceptance proves that the market was finding, and the participants were finding fair prices there. So the fact that they were finding fair prices there, they wanted to trade there, the market spent time there. If it gets back there again, it's likely to do the same. Now sometimes you see this happening in real time on volume before price. So price might be moving up, but we're starting to transact a lot of volume there, and that's available on the volume profile, and then you can anticipate beforehand that the market will move sideways around that. So these are ideas that I want you to keep in mind. Now let's talk about rejection. Rejection is lower volume at price. Now I've just highlighted on a profile on the right hand side here, taken not too long ago on the E-mini S&P, areas that I see as low volume areas, not low volume nodes. There is this idea that low volume nodes are the areas to focus on, but I've found through my own experience that it's more like low volume areas, not nodes. I mean, unless you're looking at a really, really short-term chart or an intraday profile, you very rarely get a specific price which rejection should occur at. Now you can break it down into one price specifically, which is like the middle of that area or the node specifically, but typically you'll get a range of prices, like this is a range of prices, this is a range of prices. So there's a range of prices here which were rejected or the market didn't want to spend time at. If you look at a time price opportunity profile, same concept you've got to look at it in the same way. Now, the belief you've got to take on, the idea you've got to take on here is the market has traded less volume in the past in those areas. It has spent less time there in the past. So the next time we revisit low volume areas or where the market has spent less time, we should also anticipate again that the market will again spend less time there, therefore move away very quickly. It will also transact less volume again there. Okay. Now, the longer or further you go back in time, the further your profile goes back, which I'll show you in a minute. I'm talking more than just outside of the intraday profile perspective. Although the concepts apply, intraday you'll see the low volume areas being filled out consistently. They're going to break, fill out, and they're going to low volume areas are all of a sudden going to become high volume areas intraday. So you don't want to use these concepts on too short a time frame. You've got to use what I call composite profiling, which I want to show you. Okay, and I'm going to show you how to use a profile indicator in MarketDelta to be able to do that. Okay, to see where these unfair prices are in order to find your potential entry areas. So the unfair prices, these rejection areas where the market spends less time, less volume, become your areas to focus on finding potential entries. So they're going to create your ideas, your visions, your expectancies, or where the market's going to go from and then potentially to. All right? So firstly, just understand acceptance and rejection. The market is going to find these areas of acceptance, fairer prices, proven through time at price, volume at price. And then it's going to find these areas of unfair prices, proven through low volume at price, spending less time at those areas. The anticipation, the expectancy here is that we will do the same, at least until it doesn't. And I'm going to show you a real, it's a great technique. And if you use it correctly, you'll be able to establish exactly where the fair prices are and where the unfair prices are. And you'll be able to flow with the market. You'll be able to establish where the new fairer prices are being established in real time and where the unfair prices are being broken as well. So unfair prices, the low volume rejection areas highlighted by the yellow rectangles here. If you look at the profile on the right, this is a composite profile. These low volume areas, that's where the profile drops off. So these are like the valleys. Okay, MarketDelta and the profile indicator has a fantastic ability to be able to do this for you. It actually highlights the low volume areas, the valleys like these. And it can also highlight these high volume nodes for you. So it can actually highlight for you the low volume areas or the unfair prices and the fair prices. Okay, and that's going to form your framework for doing business around. Doesn't matter what perspective you take, whether it's a swing trader, position trader, scalper, whether you're looking at intraday position swing trades like me, it doesn't matter. The idea is going to stay the same, and you'll see it time and time again. Okay, these are the ideas I want you to firstly understand, believe in, understand that it makes sense, common sense, because the market hasn't traded there before, shouldn't want to trade there again. It's traded in these areas of higher time volume before, so it's more likely to trade there again. Very simple concept, but very, very effective. Okay, so the rejection areas, the low volume areas, or the areas where we spend less time, typically leads to reversals, which is basically what we look for. I don't know about you guys, but when I'm looking for entries, I'm looking for some kind of reversal. So, you know, the market could be, you know, let me just throw some ideas out there. You know, how can you use just what I've just explained to you just right now? It's really, really simple. All right, auction market theory, profiling made really, really simple. Okay, as far as I'm concerned, this is the basics, but at the same time, if you understand this effectively, you understand this fully, you could use this and nothing else to create your ideas and find your entries or entry points, etc., and find your targets without nothing else. Okay, you can create your plan every day just using these concepts. That's exactly what I do right now. I don't use anything else. Okay, now I'll show you some other ideas, and I do use some other concepts like confluence, and I look at other time frames which are related, and I do use a top-down approach for pre-market analysis, etc. But you know, you gotta have a foundation to that. You got to understand where to start with this stuff. So if you can understand acceptance rejection in this manner and understand what it actually means and understand that unfair prices is where you want to do business and the fair prices is where you want to trade towards, that's all you need to take into consideration right now. With that simple level of understanding, that simple knowledge, you can be much more effective than most profile traders are because they've overcomplicated this. Okay, I've seen it. I've worked with traders that have done that. Okay, there are those guys which think they know it all and they know so much about it, but they're still not profitable. I mean, the thing is, if you can understand something as simple as what I've just shared so far in less than half an hour, if you can fully grasp those concepts, you should be able to create ideas that you have belief and confidence in, and you should be able to create a plan every day. It doesn't matter what your objectives are, with those concepts alone. Now, you don't have to read a book. You don't have to sit there and understand every phrase and terminology related to profile trading because most of them are irrelevant if you understand acceptance rejection. That's it. Okay. Now we talk about value area high, value area low, VPOC, which I'm going to move on to next. You know, those are still applying the same concepts. Let's move on. So custom value areas. Now I talk about custom value areas. Why do I call it a custom value area? Because most auction market theory profile traders use the developing profile, the day profile, or previous day's profile, or the day before. So they're looking at profiles split into days. All right. Now, the thing is, I used to do business that way. I used to see the market that way as well because that was all I knew, you know, a few years ago. That's how I understood the profile. Now, that's not to say that it's not effective. It's just, in my opinion, not as effective as what I do now and what I'm going to show you with custom profiling. Now, again, that's my opinion. All I say is just take it on, see how it makes sense for you. I mean, it's common sense for me. I'm going to show you guys why it is. I'm going to explain to you why it is common sense, why it makes more sense than using a profile that started yesterday or the day before. Okay, it's real basic stuff. Right, so the custom value area profiles used to identify balance or value. Okay, now balance is really, really simple. It's price moving sideways. Now, in most cases, you'll see price moving sideways after the fact. But in many cases, you'll see acceptance on a profile before price moves sideways around it. Okay, so it's, again, two-sided. Whereas price moving sideways can define where the value area might be or where the market is finding value, sometimes the volume profile will build this kind of distribution of acceptance at price before price actually moves sideways alongside this. Okay, so you know, this in a way allows for you to define where the market is going to move sideways before it actually does. And it happens a hell of a lot. Okay, so you know, I often get a question, especially from the new guys, and they say, okay, well, you know, you're talking about profiles, you're establishing these profiles, you know, after the fact during webinars and seminars like this. Of course, that's the only thing I'm going to do right now. But I mean, I'll explain to you how the next profile will develop and how it's going to become evident. I mean, I do this every day in our live training room. I explain, okay, look, this is where the new value area, I anticipate it's going to be around this area, way before it does, okay, before even price moves sideways against it. So once you've got proficient at profiling and you've understood the basic concepts, if you can understand price alone is showing just price action, it's the advertising mechanism, and you can see the actual volume at price is showing where the acceptance was. If you take the beliefs on that I've just shared, all right, you'll then understand why price should move up and down around that area. Why? Really, really simple. Because the market participants, whoever they are, irrelevant of the fact if they're looking at this or not, they are proving that they want to do business around that range. They have proven, because these volume profiles only show you where transactions have taken place. Right? Price sometimes will not show you where the market's going to move sideways until it does. Volume, however, does. Volume can give you an idea where the market is likely to come back to and move sideways before it actually does. right? This is key because this is going to be able to allow for you to create ideas, assumptions, expectations before the market does what it's going to do. Now, the other great thing is even when price does confirm the market moving sideways around a range like this, and you draw a profile around it, it's then going to trade around that at least for a significant period of time for a good few opportunities. And many times it's many, many days. You know, I'll show you what even the S&P has been up to recently and why I've been anticipating it's going to move higher this week. You know, I've seen that since last week. Well, I'll show you Thursday, Friday's rotation down. I'll be speaking about this in the training room. But, you know, I see these moves way before they happen because it makes common sense. Auction market theory just makes common sense. It's logical. You know, the market, even if market participants are not seeing the market using what I'm seeing or what you guys are going to see through this, it's a way of peeking into the market and what's actually going on, what's truly going on, without looking at price just by itself. Price itself provides a lot of clues. But when you put price, time, and volume together, it provides so many clues that, you know, you do get that opportunity to see what's going to happen before it happens. I mean, I can only go on experience, and it keeps repeating itself time and time again. So, you know, it's up to you guys to prove it to yourself. You know, I can't prove it to you through a 1-hour presentation. It's not going to happen. All right, but what you can do is just say, look, this makes sense. It's logical. You know, the market doesn't want to trade where it's proven it doesn't want to trade. It hasn't traded volume there before, so it's quite likely it won't trade volume there. Wait a minute, where it's traded volume before and accepted before, it kind of makes sense why I should want to go there again. Let me have a look at this and just watch it. That's what I did. And you'll see it proven time and time again. And through that, you'll develop belief and confidence in these ideas, just like I have and many others have. Now, you know, it does come down to execution and manage the trades, of course, amongst that, you know, of course, which is beyond the scope of this webinar seminar. But, you know, it's got to start somewhere. And I think if you can start with having some belief and confidence, which comes from a state of common sense, a place where all human beings can look at this and say, wait a minute, that's just the way people do business in life. You know, the market's not just random. It's doing stuff time and time again that makes sense. I'm going to show you some stuff anyway in a little while. So, you know, if you guys want to see more, you know, just come into the room, the training room, and just have a look. You know, look at my seminars and webinars I've done in the past. I'm going to show you guys what the market's been doing now. If you don't believe it, you got to keep testing it. Got to keep testing it. You know, test yourself, test my knowledge, test my experience. You know, come into the room and check it out there if you like. You know, I ain't gonna push anyone to do anything specifically, but you know, look, at the end of the day, at least push yourself to make sense of the market to the extent where you believe in it. You believe that this makes sense. Don't just take my word for it or anybody else's. Okay, don't ever do that because that's never going to be enough. You've got to test these ideas out for yourself. All right, it's not for everyone. Discretionary trading is not for everyone because it involves making choices and decisions. It involves making the plan yourself and not letting the system make the plan for you. All right, not for everyone because not many traders want to be involved in the market. They want to be removed. They want to be told what to do. I don't ever tell anybody what to do. I never will because that's not going to help you and it doesn't help me. So, you know, my ideas and opinions are based upon these concepts. And all I want to share is my concepts. I don't want to share what I'm going to look at and what I'm going to trade because that's irrelevant to you because your objectives might be completely different. All right? Now, they might be the same, but I don't know that, you know. So, anyway, what I say is just take on the ideas, the concepts. All right? So, value. Custom value areas. I call them custom value areas. You can call them what you like. Basically, it's a profile where I start, where I believe the profile should start based upon balance, where I want to define value. Value is where the market spends 70% of its time. Or if you're using volume analysis, which I do, it's where 70% of the volume actually traded. It's where 70% of the transactions traded, whatever you want to call it. It's basically where 70% of the trades took place, volume traded, whatever you want to call it, it's the same thing. All right, let's just say a lot of business took place there. All right, let's just make this, put into layman's terms. A lot of business took place there. 70% is quite a bit. Okay, it's more than 50%, so at least more than half the people there that are doing business in the range are seeing somewhere of value here. They're seeing it of maybe fair. That's why they're doing business there. Not because they're looking at the profile, because they are subconsciously, unconsciously doing business in this marketplace, which is an auction, which is in itself establishing these fair prices, right? Now, if every Tom, Dick, and Harry out there was looking at profiling, probably wouldn't even have the same edge, all right? Because the fact is here, we are looking at what the market is unfolding. We are taking advantage of what others don't see. We are taking advantage of the market moving above value and buyers buying at unfair prices and sellers selling at unfair prices, which I'm going to talk about now. All right, so the value area defines one really simple thing where value is. Right, that's that yellow rectangle which I just took there, and it's the blue filled out area on the profile. Now I'll just draw around the profile there. This is actually the more frequent range that we just went into. This is when the sell-off happened on Friday. This is where the bottom just happened. Now, why did that bottom happen there, and why did it go up? I mean, this is looking at Friday. Why am I not looking at selling there? Why have I been saying in our training room? Well, firstly, we was looking for sellers up here at 67. Why did this become no surprise to me that it moved down to here? Why is it no surprise that when we got down here, didn't take out or just tested this low and then came back up? And I don't know where the ES is right now. I'm looking at it, 1851. Why are we trading back towards 1867? All right, now what I want you guys to do is understand why. Why? If you don't understand why this market went down here on Friday and why it is now heading towards 67, you have no place trading in auction market theory and profiling, because this is the most basic concept you need to get. The market went below value. That's unfair for the sellers, all right? So I often refer to unfair lows and unfair highs, right? So we're talking about, again, low volume areas, high volume areas. Well, look at this. Where's the high volume area around a value area? Where the value area is. It's 70% of volume traded there. That's the highest volume area. So it defines to you where the market participants, irrelevant of the fact whether they see value or not, that's where the value is for the marketplace. For the marketplace, not the individual market participants or the institutions as a whole. This is about the market. You're trying to read the market here. These market participants make the market, right? Now, value and 70% of the transactions took place up there. Now, there was some interest there, right? Now, as long as this profile, now, if I draw around this profile, there's no real volume down here. It's insignificant. Now, if this market price advertises down there and no volume distribution starts to occur where we didn't do this down there. We didn't do that, which is acceptance. That's fair prices being found below value. We didn't do that. What we did is we tested down there, come straight back up. Why? Because we didn't find fair prices outside of these fair prices. We didn't do it. We didn't find it. So it's logical for the market to go from these fair prices back into these fair prices. Now, I didn't expect to cover this today because I didn't know when I created this presentation for today that this market was going to hold that unfair low to the extent that it did in this particular perspective. I mean, I had an idea because of, I'm going to show you now when I put it into perspective, that those unfair lows were going to hold out at some point. At the same time, you don't want to pick tops and bottoms with this, all right? Now, some guys think, okay, well, that's an unfair price. You know, it should go back into acceptance. Let's just get in. You know, you don't want to do that at the same time, right? You know, there is this idea. This is the foundation of it. You know, this is about finding the opportunity, about showing interest in certain areas. You know, it's not about execution. Execution and timing is a completely different topic. It's another webinar in itself, which I've done, you know, before in the past with MarketDelta, and you know, there's some on the website. So when it comes to timing and execution, you know, you've got to understand, okay, well, this is a really big swing down, so I've got to look at shorter term focus here. I've got to focus on, you know, the market showing some kind of bottoming formation. Now, if this was the 5-minute range and it was the same idea, well, I wouldn't sit there and wait for a bottom. I pick it more aggressively. Why? Because the market's more likely to reject and move up more quickly. So this is common sense stuff, right? So what I say is, when you look at value, if it's a value area that's been there for days or weeks, take your time buying into it or selling into it, right? The idea here, what I try to do, and I focus on balance. I sell these areas above value because they are unfair for the buyer. I expect buyers that buy at unfair prices to get stuck and be buying at unfair prices, right? Sellers doing business at the unfair lows, right? Sellers that are doing business down here below value are selling into unfair lows. This is a belief. This is the foundational belief you've got to have as an auction market theory balanced value trader, right? So what I do, I sit here, I say I'm going to be like, let's say the market's trading around this. Before we knew this market's going to move up, I already know. Doesn't matter whether this is a 5-minute chart, whether it's intraday, whether it's a 30, 60-minute profile, doesn't matter. It's irrelevant. It's the same concept. This happens to be a daily chart profile that I have here. And I'll show you in a little while once I move to the charts, right? I'm going to put the composite profile against this and you'll see how it all comes together. Really, really simple. Right, but the idea firstly is to find value, okay? Then you've got to find the low volume areas below value. So if I was to draw a profile, for example, here on the right-hand side, let's say we had a low volume there, we had some acceptance there, we had a low volume down here. Let's say the composite profile looks like that. I mean, that's just a drawing, but you'll see, you'll see the same kind of stuff. All right, what I can do ahead of time, before the market even gets lower, I can say, look, I want to buy down here. That's a key low volume, unfair prices, right? But where is that unfair price? That unfair price on a composite profile, which has taken over months and months and weeks, is below the area that I perceive to be your value right now. So there's two things you've got to put together here. Value, acceptance, shorter term. What is a value area that you want to trade around right now? All right, now this is not the same for everyone. Now I get guys saying, look, you had your value area starting here, I had mine starting here. You was looking at a longer time frame value area, and I was looking at a shorter time frame value area. How do I do exactly what you just done? I said, well, you don't need to. You took the idea on board, you created your plan, and you should be creating your plan based upon your objectives, not mine. Right? So if you're looking at a value area that's like 5 points wide on the E-mini S&P, that's your objective. I might be looking at a 20-point wide value area. But that's because that's my objective. And your objectives are going to define what you trade. Now you might be a scalper and you find a value area on 5-minute charts. And you say, look, I want to scalp for 6 or 8 ticks. I'm not interested in these 5 to 6 points, 7 to 10 point swings intraday. Well, that's your focus. You can do exactly the same thing. I haven't got a time on this profile that I've got here on the chart, on the screen right now. The idea is the same. Whether that was over half an hour, whether that was over 2 or 3 days, whether that was over a month, irrelevant. It's the same idea. Unfair lows, low volume area below value, anticipate a rotation back into value. Simple. Keep it simple, all right? Don't get tied up with these ideas that, pi squared equals whatever. You don't need to get involved in these mathematical calculations and things. Keep it really simple, logical, common sense, layman's terms. All right, so this is the low volume area above value. Okay, I'm showing you, I'm just drawing stuff on the chart here, but I just want to get the point across. When this market gets above here, the low volume area is above there. You can sit there and say, look, I want to wait for that area to test. I want to wait for some kind of topping formation there. That's where I want to get short, because I anticipate the market to go back to value. All right, so it's establish your value area. Establish your value area from your time frame perspective and your personal objectives. Don't let it be mine or anybody else's. Okay, I mean, I share my pre-market analysis, visions, and expectancies from the training room, the L2ST training room, and I share them. I put them on Twitter. But I say at the same time, no, this ain't meant to this ain't supposed to be your plan. This is my plan. This is the way that I see things. Make of it what you will. Because, I'm not here to give you a fish. I'm here to teach you how to fish. And, you might be fishing for a 1 contract, 2 contract trade, while I'm sitting there trading 30 to 60 contracts. What I'm trying to do is nothing to do with what you're doing. You've got a completely different focus. Now, do business in your realm. Do business in your field where you should be doing business. Don't worry about what I'm up to and what anybody else is up to. Make sense of the information, understand it, and then put it to use in line with your own goals and objectives. All right? So, this is about understanding concepts. This is about understanding ideas, why it makes sense, common sense. Put it into layman's terms. Cut out all the BS. What are we looking at here? Low volume areas back in a high volume areas. That's it. Simple. Keep it simple. Right? Where the market didn't want to spend time, where it didn't want to trade before, it doesn't want to go there. Okay? It shouldn't want to go there because it's proven that. Let's expect it to go back to where it should go, where it's proven in the past where it should go, where it wants to trade, where market participants are interested. All right? The market will trade value until it finds acceptance outside of the range. So when do you know, when you've got a profile like this, okay, look, let's stop focusing on buying here and selling here. When do you know that? Now let me ask you the question, when do you know that? Based upon what I've just explained today, what would make the most sense? When should you consider not buying below value and selling above this value area? Let me tell you how, because these profiles build in real time. When you see a distribution like this starting to develop, price has gone up there and it starts to do this, or volume starts to develop first, you know we're accepting above that area. When the price dropped down here and we saw a distribution down here, which we didn't, but if it did, I'd say, okay, there's a chance the market's going to establish a new balanced value area down there. The market's going to potentially move sideways in a new area now. New value going to potentially come our way. So you can see where value is going to be because the profile distribution tells you in real time. Just a matter of building experience to see it. Really common sense, simple stuff, guys. Just take it on. All right, so creating visions and expectancies. I mean, sort of gone through this already. But, here's the ES. this is a visualization that I spoke about last week. Actually, I think this was yesterday. We got the market trading up. We spiked up. This is a shorter term value area. Okay, now I'm going to talk about putting value areas into context. Okay, so now this is where people get a bit confused because they're thinking, okay, well, there's value here on this time frame. There's a value here on this time frame. This is where you got to say, look, what's my focus? All right, now focus on your value area. Don't focus on somebody else's value area. Okay. And how do you know that? Well, you've got to have a business plan. You've got to have a trading plan. You've got to know what kind of move you're looking for. Now, personally, for me, it's really simple, and I advise the same to my students and the guys that want to follow my work and what I do. Align yourself with the institutions. Align yourself with the longer time frame players. Don't look at anything less than a 30-minute chart, okay, to establish your visions and expectancies in terms of value. Why? Because your institutions are not going to be scalping intraday. You'll get traders that are prop traders. Lots of scalpers are prop traders, okay, and you'll get a lot of business there, but they're looking for like few ticks here and there. I'm a prop trader. I know. They call me the longer time frame trader at my prop firm, right? And I'm not a longer time frame trader. I'm an intraday trader. They call me a longer time frame trader because I'm probably one of the guys that holds position the longest, more than anybody else, right? But in London, in the UK, prop firms mostly focus on spread betting. 90% of them, spread betting, spread trading. They trade spreads, okay? So they're not even interested in directional moves. They're interested in making a spread. They're interested in, okay, well, I'm long this market, short this market. If any of you guys are new to spreading, it's basically short-term hedging. Every position is hedged. So there's never a naked position. So, you're like long, the E-mini S&P June contract while you're short the September contract or something. Or you're long the Euro stocks and short the E-mini S&P. And that's hedging a position. Your risk is hedged, and you're trying to make up the position and the opportunity in the trade through the difference in the spread. Now, that's different. Okay, 90% of the prop traders in the UK, London, this is like this spread trading capital of the world. London, and most prop traders, at least where I'm at, to focus on prop trading, and most prop firms that I've ever worked with focus on spread trading. Sorry. Okay. Now I'm an outright trader. I trade outright naked positions. I'm long or I'm short. That's it. All right. And most guys that are there, they do focus on scalping. Okay, because they're in and out within a few minutes. Now they're not going to move the market as much as they might trade 50 to 100 contracts. Maybe even more. They're not going to move the market. They're looking for 2, 3, 4 ticks, 5 ticks, depending on the market. If it's a DAX or YM or something a bit more volatile, maybe 10. 12 ticks, you know, at most. That's not my time frame. Most of the time I'm trading against them guys, right? The guys that I'm trying to align myself with is the institutional activity, you know, the hedge funds, the institutional activity, the investment banks, pumping in clients' funds for the long term, you know, putting in capital to move these markets for a significant period of time. When that kind of cash flow comes to the markets move with a better risk-reward ratio. So that's why I align myself with the elephants. I'm just the fly on the back of the elephant. That's all I am. I don't want to become an elephant. I'm not trying to pick the tops and bottoms like an elephant because I can't. I'm not going to stop the market in its tracks when it's moving lower or higher. What I can do is, however, watch them doing business in the areas that I anticipate and then jump on board. Right? You know, again, I'm starting to get a little bit off topic because I'm going into execution here, and this idea of trying to be the first one in. You know, I use MarketDelta footprints for execution. Fantastic tool, but it's the icing on the cake for me. I use MarketDelta for charting, profiling, as I want to show you guys, but it's the icing on the cake. Okay. Now, what you can do when you've got these areas, I mean, we've got a shorter-term value area here, and we actually did see this move, and we're now much more above it. We're trading 1815s right now. So we've got above this, but I was anticipating buys down here. I've picked up low volume nodes, 1811, 1808. These areas below value. The value area I've just highlighted in a yellow rectangle. Right, that's a shorter term value. There is a wider value area which I'm going to show you, which we're going into, and it's something that I've been talking about in the training room and posting tweets up about. No real surprise why the market's where it is right now and why it's moved up again today. No real surprise at all. So every now and again you see these opportunities where the market can move such a significant amount in a short period of time. Now, the thing is, when you really understand option market theory, you see them moves ahead of time. Now, I don't know how long they're going to take, but I mean, I didn't expect the move down to these unfair lows to happen as quick as it did. But when it's happening, at least I know where it's going to. I don't know how long it's going to take, but at least I know where it's potentially going to. I say potentially because I don't know for sure. I'm humble. I'm humble. I don't know for sure. Nobody has certainty. I definitely don't. I'm not so cocky that I know for sure what the market's going to do. For sure, with certainty. But I know with a high degree of accuracy, with a high degree of confidence, with some probability, and all that probability is as a discretionary trader. It's not about a back test where I back tested it 3 years in advance. All right, you can't do that. You know, I've had people ask me, look, you know, what if I back test this? How much is it proven, etc. You know, get out of that systematic mechanical trading. This is not a system. It's about making sense of what's going on, reading the market for what it is, and saying, look, this is more likely today, right now, more than it's not. That's it. That's your probability as a discretionary trader. There's no percentages in this. There's no percentage until you perform. You only get your percentages and your win percentage and your payoff ratio, etc., as you perform as an individual. All right? Get out of this mechanical, systematic mentality. When you're trading auction market theory and profiling as a discretionary trader, it's about discretion. It's about making choices, decisions in the moment, and figuring out what's more likely versus not. That's it. That's it. End of story. What's more likely right now versus not? Am I interested more in buying? Am I more interested in selling? Where can the market go to if I'm long? What makes sense? What makes sense if I'm short? Where should it go to? That's it. You don't need a back test. All you need is common sense and be able to read the market with auction market theory and profile. That's it. You don't need anything else. That's what your confidence has got to be. All right? Now, I mean, it's easy for me to say that. I've been doing this for a long time, and I trade this every day, well, at least when the opportunities are there. So it's easy for me to do that, but you know, I understand that, and it's hard for some guys to listen and say, look, well, yeah, you know, you say this, but you know, I don't have the experience you have. But you know, you've got to start somewhere. You know, if you can't take my experience for what it is, or you know, that's why I sit here and say, look, make it your own, prove it to yourself, test it if you have to, sim trade, prove it to yourself that you can do something with this. If you can't, fair enough, you know, but test it out for yourself. I ain't gonna sit there and say, because this works for me, it's gonna work for you. I don't know. It's gotta resonate with you and your personality, your character. Discretionary trading, from my experience, is not for everyone. Some traders want to know exactly what to do and when to do it. I'm not about that. I don't teach you that. I teach you how to understand the market, read it the way I do, understand why I see it that way, and then see how you get on. That's it. End of story. Right. So the idea here is to visualize where the market's going to go from and to. Now, we talked about unfair lows. Right. The market doesn't want to spend time there, doesn't want to trade volume there. So it shouldn't basically spend a lot of time there. Simple stuff. All right, so now when we look at a composite profile, what you see on the right-hand side on this screenshot here is a composite profile. And this goes quite far back, and I'll show you exactly when and how I got this. But it actually really doesn't matter exactly where you take it from. But, I have my points. I'll show you why I take them from there, and you can choose with your why you should take it from there. But I think a lot of it depends on what your perspective is, what your objectives are, what your goals are, right? So, these LVNs, this profile goes back quite some time, and I've got low volume areas and acceptance areas developing over months and weeks. We went through a phase there where the market went into completely new highs. We didn't have any levels to work with. But the market, you just got to wait and be a bit more patient. I mean, that's another story, price discovery phase, but, I talk about it in the room as well. I've got it at the moment on the Bund. I couldn't trade the Bund today because that's what I focus on mostly, the Euro Bund, that is. And I use confluence on the bubble, and sometimes I trade the Euro stocks and the DAX during the European session. Now, sometimes I can't trade because what I'm looking for isn't happening. The market's just doing short-term stuff, and I'm not interested in that. I want the longer time frame players to come in. So, the other thing, you've got to get across and get beyond really is your ego, and I think, again, it's another webinar and a seminar on itself. So, your ego will drive you and suck you into, look, I need to trade today, I need to do something right now because I'm here, I'm wasting my time, etc. But the thing is, trading is not like that. Some days you've got to sit there, especially with the perspective that I take, you've got to sit there for 3 hours, 4 hours and do nothing. And that's trading. Because nothing comes your way. And I sometimes sit there and I have to wait another day. I have a contingency plan. I focus on Euro stocks or DAX or something, to make up for that. There was a period where I focused on the US markets as well. Now I just focus on the training during that time. I've been in this a long time. My values are very different to somebody that's new and starting in this. And I've done my time in the markets. Now it's about scaling back and taking it easy, really. So that's what I do. It's about sharing my knowledge and experience and helping some people like you guys. Take what you can from it. The market does go from low volume areas back into high volume areas. And back to low volume areas. That's the idea. So, if you look at this, the green circle highlights where I might want to trade. The yellow lines highlight where the market may go from and to. But, what I'm doing here, I mean, some of you guys are probably following me on Twitter and you'll see stuff like this, and I draw arrows. And what I'm saying here, firstly, there's no red circle, which means I'm not interested in shorting. So I'd watch that market go from 1817 back to 1800s quite comfortably. Why? Because I know that's not my focus. So one of the things, and I put a video on YouTube the other day, actually. I'll put a link up to it. If you're not already on the YouTube page, just go there. And it's about, developing patience and developing discipline, And I think, if you don't know what you're looking for, you're in a position where you're actually gonna do stuff that you shouldn't do. You got to know what you got to wait for in order to be patient. I've learned this myself with working with guys because there's all this stuff about working on your psychology and your mindset, and I even talk about that. I coach traders on that stuff, the NLP stuff, the meditation, etc. But at the end of the day, if you don't know what you should be doing, firstly, you're not ready to start even working on your mindset. Firstly, you've got to understand how and why and what. Once you know that and you're still making mistakes and you're still having problems, then work on your psychology, So, I'd send this out. I don't know if it will come out to everyone, but there's a link to being patient and building discipline through a clearer plan. I talk about identifying your areas, etc., making it clear what you need to see. So what I'm doing here with these yellow arrows, I mean, these are visualizations. These are what I call visualizations ahead of time. So the market is trading somewhere else. But what I'm doing is mentally rehearsing, visualizing what the market's going to do before it does it. And this is where I get to trading ideas, right? So now we've understood some basic concepts. Now, how do you form those basic ideas, those concepts, right? Now, plan your trades around these visions and expectancies, right? So, draw arrows on the chart if you need to. I used to do this, and I don't even do this anymore so I do this in my head. I draw these arrows, the green circles, the red circles that you guys see me showing in the training room and on Twitter and stuff like that. I do it because I want to get across what's in my head, right? When you've been doing it long enough, you just do it in your head. You just know, okay, I want to wait for this. And then if this happens, like what I'm doing here is saying, okay, I'll wait for it to test 1808. I'll wait for it to get 11.25. Just in case you can't see this price, the first green line is 11.25. Next green line, 1808.5. So what I'm saying is that I'll wait for it to get to 1808.5. I'd wait for it to get above 1811.25. Wait for it to pull back a little bit, then watch the footprints. And that's where I'd say, look, now it's time for icing on the cake. Watch the footprints. What I don't do is try to buy at every level on the way down. Right? You're going to struggle with that. Doesn't matter who you are. Right? So don't try to buy every level below value, and don't try to short every level above value. Make it much more clearer. Make it more concise. Say, look, I want to see some auction failure down here before I am interested on the upside. I want to see some auction failure up here before I'm interested on the downside. Now, all I say is in the smaller ranges, or if you're scalping, or you're looking to get in and out within minutes, then you don't need those higher lows and the lower highs. But if you're looking at bigger moves, and I'm talking about 5, 6, 7 to 10 points on the ES, that's typically what I focus on in our training room, those kinds of objectives. Those moves, a lot of the time, we've got to wait. And I'll often say, look, we've got about 20 minutes, 15 minutes, half an hour before this requires us to look at the order flow. Now, if you don't know how long you should wait to look at the order flow or the footprints, you ain't doing something right. You need to know how long you got to wait, and you've got to be patient for that before you start looking at order flow. If you're trying to look for a 20-point move up or a 10-point move up on the ES, it's not going to happen on a turn of a dime. We had a 20-point, 15-point move down, and it's not going to just turn around all of a sudden. Every now and again it will, maybe on a number or something, but you're kidding yourself if that's going to happen consistently. Now, if you're trading a 2 or 3 point range on the E-mini S&P, I'm talking about the E-mini S&P, it doesn't matter which market it is, but E-mini S&P seems to be a popular market, so let's talk about that. Right? If it's going to be a 2 to 3 point swing or range on the ES, we're looking at a 5, 15-minute chart, well, that, you need to be a bit more aggressive. You need to know when you need to be aggressive and more conservative when you entries beforehand. Create your ideas and visions and expectancies beforehand. Understanding potential risk to reward using these concepts before you engage in these opportunities. So, for example, we got unfair lows here. I would already know we're expecting this to go to this value high. I mean, that was taken before this market actually moved there. The ES, that value high was 1824. It happened. It's already happened. We're much further than that now. Okay, and then the next expectancy comes in. Next pre-market analysis, top-down analysis comes in. All right. So I'm going to spend some time on the charts now. Firstly, I just want to get this across. More information. If you want to check us out, L2ST.co.uk. I haven't got anything to sell. If you want to buy anything, it's on the website. That's my pitch. info@L2ST.co.uk. That's the email address. If you want to get hold of me, you want to ask me some questions, if you don't get a chance to ask it today, or you don't know what to ask, or I don't get a chance to get to your question, just send me an email. I'll be happy to get to it. I do get a lot of emails, so please give me a few days to get to it. That's all I ask. Don't expect a reply, within a few minutes or a few hours. Usually it's a few days, so just want to get that across as well. All right, so let's finish off there, and let's now move to some charts. So, basic concepts here. We're talking about using the profile indicator, okay? Now, we're at quarter past now. I'm going to do probably about 5, 7 minutes, 8 minutes. Let's do 10 minutes. 10 minutes on the charts, and then I'll go into some Q&A, and I'll do 10 minutes Q&A, okay? Right, so this is E-mini S&P. When we're still moving up, I expected this anyway. Why did I expect this? Why did I expect the E-mini S&P to be where it is today? A few days in advance. Why? I think that's the most important question, why? Don't ask, how did I get in, how did I get out? That's not going to help you. That helped me, right? That's God. How's it going to help you in the past? I mean in the future. How's it going to help you in the future? What happened in the past, of course, is relevant. But how is it going to help you moving forward? What's going to make sense to you? Well, you need to understand why it made sense in the first place. The why. If you understand why and you focus your learning, your journey as a trader, when you focus your specific focus on this idea of why does that happen? Why does that make sense? If you keep picking at that idea, that why, that's what I did, right? When I kept saying why does that make sense? Why does it need to do this? Why does that happen so often? You know, why does this just keep repeating itself time and time again? Then you have what you are looking for, which is understanding. Understand the why, you'll get the understanding that you need. All right? Now, most people, what they do, okay, I want to learn this, they read a book. Attend a seminar like this, take some notes. Like, if you're not understanding what it was about and what it meant, you're not getting the message. It's not going to mean anything. It's useless. It's useless. You can read as many books as you like, but if you don't understand why it had the message it did and why it made sense, it's not going to help you. That's it. You know, so sit there and understand the why. You know, one of the things that I do each and every single day in my training room, when I do webinars, seminars like this, I've grown as a coach, as a trainer. I've been in this since 2005, right? I sit there and I teach the why. I explain why does it make sense, right? Make of it what you will. Put that why into your objectives, your goals, all right? Do that. Let's look at the daily chart. Top-down approach. Now, as a day trader, a lot of traders come my way and they say, look, I don't really see why you're looking at a daily chart. What's that got to do with day trading? Well, I'll explain to you, okay? The thing is, the market is a market. The E-mini S&P, whether you look at a daily chart or a 5-minute chart, doesn't change all of a sudden to another market. It's still the E-mini S&P. Some people are probably sitting there thinking, okay, well, tell me something I don't know. All right, you'll be surprised at how many people sit there and look at a 5-minute chart or a Renko chart or a volume chart and forget about what the bigger picture is. All right. Now, let me just break this down. Break this down in its most basic form. All right. Now, the market doesn't move up forever, but one of the things we know is that this low right here, and that's when my profile starts. This low, actually my profile starts a bit sooner now, but before in the past it started down there in 2009 lows. Those are March 2009 lows. I know them really well because I've been focusing on them ever since it was put in, right? So those are the 2009 lows. I mean, price action is showing you it's moving up, higher highs, higher lows. You know, first of all, what we can say is, you know, the market is clearly imbalanced higher. Longer time frame, capital, money is still being pumped up higher. Now, what from a profile perspective will say that's over? Well, price will move up, and when you try to pick the top, you never really know because you're just trying to guess. But from a profile perspective, there's a good way to know, okay, now something's up. Firstly, I've been drawing profiles, as you can see. These are 2009 lows. That's 09 right there. That's March 2009 down there. All right. Now, ever since then, I've been drawing these profiles. I've not taken them off since. I've not put them on just for today. You know, these profiles have been there since I've been watching this market since then. I mean, I've been trading it way before then. But, you know, those profiles are there because I'm trying to remind myself every day. Now, sometimes I don't even remind myself. I remind guys in the room, look, just a reminder, we're still in balance higher. We're still accepting higher value, even if you look at the last few value areas. Let's zoom in a bit. This is what I call top-down analysis. Getting into the mindset of the institutional trader, the longer time frame activity, which is not there to scalp for 5 or 10 minutes, which is not there to put in some money for a client for a little 2-tick scalp. They're in for the long term. They're trying to figure out what's this market going to do for the long term. They're pumping in capital for the long term. All right, so longer time frame analysis is required in order to get an idea of where the longer time frame activity may be, what perspectives they might have. All right, so I mean, we've got value building all the way up. These value areas are the blue areas. That's 70% of range, 70% of where the volume traded. More recently, we've had a value area actually since the this area right here, I mean, I class it from where we had this bar here. I mean, I've been building this in real time. As soon as we started to develop here, I had balance. This is expanded over time. Now, I keep the real-time value area, balance area developing in real time, as long as price keeps moving sideways. And a real simple guideline for you guys, if you're not sure about price, whether it's moving sideways or not, I mean, you can see it anyway, but if it's making 80 to 100% retracements, I could go here, back up here. Sometimes just a little bit more than 100%. I have Fibonacci extensions. Again, another seminar, webinar in itself. You know, I teach it in the other stuff in, you know, in the room and in the training material. But you know, I talk about sometimes the market getting up slightly above, slightly below, and I use Fibonacci extensions. Now, there's auction market theory traders out there and say, well, Fibonacci, nothing to do with auction market theory. Moving averages, nothing to do with auction market theory, whatever. You know, and they'll sit there and say, you know, these indicators don't work. You know, nothing to do with auction market theory. Let's just focus on the profile. Well, I've been trading markets ahead of auction market theory profiling, right? And I use stage analysis. I use Fibonacci extensions. I use price action. I use moving averages when need me. Okay, but I don't sit there and say that they don't work. They're indicators. They're decision support tools. As a discretionary trader, it's my job to put them on when I think they're useful and take them off when I think they're useless. That's my job. As discretionary traders, it should be all of your jobs. All right. So now, when you try to put everything into context, it should make sense. If it doesn't make sense, take it off. Right? It's as simple as that. So now we have a profile here that's been developing for quite some time on the daily chart. Actually, what I'm going to do is I'm going to just quickly break into how to draw a custom profile. Now, a custom profile is what I have. I have a button set up in MarketDelta. If you check on MarketDelta site, it'll show you how to set up custom value profiles. Drop me an email. Drop Trevor an email. I'm sure you show you how to do it as well. You can set up buttons to any profile. Just draw anything on your chart, and if you right-click it and choose this option here, add PRO, well, actually add button. Okay, it might not be called PROF button, but just to add a button, right? Right-click on the indicator, just on the edge of the profile, for example, add the button, and what you'll get is you'll get a button right up there. And then next time you want to draw that, you can just draw it by clicking that button. You don't have to set it all up again. So it's a really, really useful tool. Now, what I do is I save those. So, like, I've got a button here, custom value profile. It's already set up, custom profile, and I've got the options already set. All right, and these are the options that I use: price and volume. I'm showing the POC value area. I'm not actually interested in the previous, so that doesn't really matter whether it's ticked or not. Now, what I do with custom profiles that are broken, I leave them set to custom. I go right here, the time. But if I want to keep it building, like the most recent one, I always keep it to present because it keeps building in real time. So as the value area high, value area low changes, it automatically adapts. The VPOP might shift as well. The profile keeps building. So you can choose this option in time per profile to keep it as a profile that is live, basically. It keeps building in real time. Now, the only thing I'm interested in is POC, volume point of control, and value area. So I choose my own colors. Choose the colors you like. I draw it as hollow box. You can make that solid blocks, whatever you like. Right? I mean, these are just, you know, formatting. It doesn't really matter. The main thing here is volume profile. I start it at a certain point. I keep it building to present for the most recent one as long as we're in value. And the ones in the past, what these ones are set up as, like when it breaks, what I do is I set these to custom. And what that does is basically, it just keeps the profile from the point that I took it from to the point that I took it to. So it's like, I suppose, like drawing a trend line, you know. I mean, I could sit here and draw another profile, for example, right here. I'll draw it from here to here. Now, what would happen, that's automatically going to go to present. But if I sit there and I double-click on the profile, change that to custom, it's going to go ahead. Let's just update this. It's going to go ahead and leave the profile wherever that acceptance was. Now, we're far away from that right now, but it's useful for me to understand where previous acceptance was. I mean, for example, let's say we do drop out of this value area. I'm going to need some new reference points. Let's say this market continued to get through this low volume area, which it held here. I could then say, okay, well, let's go back to this value area. It's going back to this value area. So then I can use those as reference points as prior acceptance areas where a lot of acceptance and volume traded. Okay, so that's why it's useful, because the market goes from one acceptance area to a new acceptance area. If it can't find, I mean, there's only two things that are going to happen here, guys. If it can't find new acceptance up here, which this profile will show me through a distribution up here, which then I'll take a new profile up here somewhere, and that's assuming price goes up here. And I'm thinking ahead of time, way ahead of time. But this is what you've got to do, because you've got to create ideas and visions and expectancies before the market does what it's got to do. But let's say it broke out of this. What about then? I mean, firstly, I probably see some acceptance down here anyway. And I could have seen the market move around this, but then I've also got these areas to reference again and say, well, we had some value down there before. We've got a bit of acceptance down here on the composite profile on the right. Acceptance and rejection, really simple concepts. All right, so what have we got? Composite profile on the right, custom profiles that I've been drawing with the value areas there. Now my my composite profile, sorry, on the right hand side, this is the one that I have on the right, and this is what I use for my levels. Identify my rejection areas that I'm trying to trade around and do business off. So basically, like, the value area is only going to show me where acceptance currently is. It's not going to really show me where to buy and sell above and below, because I don't want to just sell anywhere above value or buy anywhere below value. I want to pick my points. I want to pick my points which are higher probability where the market is likely to reject and move away from. So what I do with that is put a composite profile on the right. Now what you'll find here is the composite profile on the right, I've got it on some simple settings. This is all the profile indicator. This whole webinar is about the profile indicator if you haven't got that already. All right, so the profile indicator is one indicator in MarketDelta. Okay, now traditionally you might use some profiles, you might use the traditional market profiling concepts like this. This is the traditional market profile indicator. All right, now Trevor, MarketDelta, they've introduced this and they have this, and this is how I started looking at the profile. I don't use this anymore. It's a time price opportunities. It's a bit more fiddly. These profiles, like, even if I do see overlapping value, these are daily profiles. I mean, I've got to merge them together myself, like right click, merge profile right. And even then, it's only going to start wherever that day started. It's not really where balance started, that balance area down there. So it's not the truest reflection of value and balance. Because when you look at price action, you can actually see, oh, price got in there at that point of that particular day. Right, so you can actually pinpoint where value started. Like, I can sit here and say, okay, well, that's where we got right into this area. I mean, I can maybe move it across one bar, which ain't going to make a lot of difference. But that's where we got into that bar, that range, where, and I could have waited for all of this. That's 80 to 100% retracement. And then we have 100% retracement back in that high, 80% retracement, just over 100% retracement, Fibonacci extension actually, but won't go into that. Just below that low, which is just over 100%, back in the value. As far as I'm concerned, this market's sideways. So as far as I'm concerned, it's sideways price action-wise. It's sideways because there's no acceptance below value and above value. Simple stuff, really. Right, now composite profile. This, the way that I set this up, firstly, you've got to have a start date on the daily chart. I mean, this one actually is a daily bar chart, so it goes back 20 years. So this profile on the right is for all bars, same indicator, and what you'll notice here, it's basically for all bars, so that's basically 20-year profile. It's going back right to the beginning of this chart. Now that's typically what I do for a composite profile. I have it going back all the way back to wherever. Now this is a 60-minute chart. Let me just show you guys what I'll be looking at, because it's getting on a bit. It's actually a bit longer than I thought, so I want to take some questions for about 10 minutes. So I mean, let's talk about, this is a longer time frame profile on the ES, and this is how I do my analysis. This is the stuff that I post up. Now, the value area that I've been focusing on ever since we got in this area, since February, is actually this one that I've got the yellow rectangle around. And actually, there was a chart that I posted up on Twitter yesterday, which I think shows this quite clearly. Because what I showed yesterday in this is the purple areas are the shorter time frame value areas. Now, they're quite significant because you'll probably see them on like a 15-minute, 30-minute chart. All right. Now, without overcomplicating things, so I'd end up getting into stage analysis. But basically, I mean, these shorter term profiles, you will see these. You will see these around longer time frame value. But if your focus is the longer time frame value and you're trying to focus on trading with the institutions, the longer time frame, other time frame player, well, you should be focusing on that. You know, you want to be a buyer here, we're going to be a buyer down there. You know, that's what I've been focusing on. I mean, the reason why the market's up here now trading 1852s is because of that. I mean, you look at what I was covering there. So you will find these situations where there is a value area below a wider value area and a value area above a wider value area. Those are the points where I would say you focus on, you know, you use what I call confluence. So you short above that value area and this wider value area. You buy below this shorter term value area and even above it if need be for this value area, because the longer time frame value area is my objective. That's my focus. Now your focus might be a bit more shorter term if you're focusing on like getting all in, all out, and you want to trade for a few minutes rather than a few hours. Okay, but that's your focus. The concept is the same. I mean, if this was a 5-minute chart and these were like, you know, micro value areas around it, these purple areas, it's the same thing. These might be like a few seconds at a time. Okay, you know, the concept is going to be the same. So the idea here is to trade from the unfair lows. This is what I do. Okay, I focus on value area, low and below. I find levels, low volume areas, to focus on buying back into value. Low volume areas above value, back into value. The only time I stop doing that, really simple, is when we have a new value area distribution above and below value. So if you look at the ES right on that chart right there, again, I mean, actually, let's move to the real-time one, because we ain't seen it yet. I'm going to draw around the profile that I'm looking at. All right, this is a 120-minute chart. I mean, that's a longer time frame focus, but this is because this is the range the market's trading, not me. This is the range. I mean, this is what I want to focus on, but I don't want to not know the market is trading this range. So I don't want to be the seller here. What I want to know is longer time frame players have established a range of value since February, which I'm going to highlight in yellow here. All I know is I want to play with the elephants. I want to jump on their back and be that fly on the back of the elephant. And that's why, you know, this week, if any of you guys have been following me on Twitter, what I've been saying, even in this range down here, even above this area, I anticipate we're going to go to 64.5. We're still on our way. Today, I didn't think we were going to get there. I expected a move to 53, but actually just ahead of this 55 quarter level. And we're just getting there right now, actually. I tweeted that as well. So if you guys are not, you know, Trevor's put it up there, the Twitter handle. I'm going to finish up there, guys, because I can keep going on for a long, long time. And I think, you know, if you do want to know more, you should have an idea by now. First things first, check out the website. There's a webinar archive, lots of free webinars and stuff there. Get your head around that stuff. If you can get your head around that stuff, I think many of you guys are going to be able to make it on your own. But, you know, if you want the extra coach and more detail when it comes to order flex, execution, trade management around these kinds of opportunities, etc., making use of this in real time, you know, join the training room. You know, take it from there. If you're not sure where to go next, you know, just drop me an email. You know, I'm here to help you guys, and that's, you know, that's my job. So I'll take it from there, guys. I know it's gone a bit over, Trevor. I'm really, really sorry. I don't know if we've got time for a minute. Any questions, but maybe 5 minutes or so. Let's see what we've got.
Okay. Yeah, there's a few questions here. I'll go ahead and read them off and just answer. When somebody, looks like Charles was asking, basically volume profile analysis on longer term charts versus the shorter term intraday. I think you obviously touched on that quite a bit, but do you have any other comments? I mean, he looks like he used it more on intraday stuff, and you were showing a lot of daily, so anything? You still there, Cam? Cam, I don't hear you. Are you there, Cam? I can't hear anybody. Does everyone hear me? I want to make sure our sound is still good. Does everyone hear Trevor?
Hey, guys, I'm just waiting for Trevor to pick out the questions.
Yeah, can you hear me, Cam?
Thanks for the thanks and feedback, guys. Much appreciated.
I'm just waiting. I think Cam has his
I
speakers
can't
turned
hear you,
on.
Trevor.
You can hear me or cannot? Testing 1, 2, 3. Everybody can hear me except you, Cam. All right, guys. Doesn't look like Cam's able to hear me. I don't know if he's got a technical issue there. So
sorry, Trevor. I can. Yeah, somebody just gave me a kind. Oh yeah, turn on my speakers. I did mute myself. Sorry.
Okay. Okay. So
yeah. So sorry. Yeah, just go ahead, Trevor. Just give me the questions. So we'll do about 5 minutes. I think that's good enough.
all right. There near the end, you'd referenced stage analysis. A couple people were asking what you meant by that.
Okay, yeah, it's a good question. It's actually really simple. It's a good question because I get a lot of people asking about this, and actually it's the foundation of my trading career. It's one of the things that, when I got into the trading business, I needed to understand what it meant to me. I needed to find a way that I can have confidence and to trade the markets in a way that I could perceive it in such a way that I could sit there and say, look, this makes sense. I've got to do this because of this, and I had to put things in a context. And I'm talking about before auction market theory and profiling. So actually, I'm going to show you guys something because I showed the guys in the room, and you guys can see here. I mean, this is old. We're in 2014. I got a copyright 2005 with an old learn-to-stop-trade.co.uk logo there at the bottom, right? But this is stage analysis. I mean, I think if you guys can see this, and I'll show you guys how it applies to what we've been seeing recently because I've been talking about it quite a lot. Stage 1, consolidation ambiguity. It's really, this is the cycles in the market. You've got 4 cycles typically in the marketplace. Of course, nothing's textbook. It's just like the 4 cycles in life. You're born, teenage years, middle age, all downhill from there, right? And then you got the 4 seasons in the year. It's the same thing in the market. There's seasons, there's cycles, right? So you have the stage 1, which is accumulation, consolidation, ambiguity. This is the emotion of the market. Like I said, this is the foundation of my whole trading career. I still use this to this day. I spoke about this earlier. I use moving averages. I use stage analysis because, I've got no reason not to. I use Fibonacci as well, right? It all makes sense. So, the stage 1 is when the market is consolidating. It's mostly unnoticed and underappreciated by the public. Smart money begins to nibble up on the supply. That's why with Thursday's Friday sell-off into the unfilled below value, I've been saying that's a stage 1, assume stage 1. And when we started to come out of it, yesterday and the day before, I was explaining we're going into early stage 2. Early stage 2 is where the smart money starts to aggressively buy orders, put buy orders in. They start to buy, nibble up on the supply, and actually initiate orders above a shorter term balance value area below. Late stage 2 is the fear of missed opportunity or greed. The guys that I said, oh, fear of missing out. I've missed this. I've got to really get on board this big move up. I'm sure guys are there, jumping on board this big up move. Today getting called out as well. We talked about the longer time frame players still potentially jumping in again, and they did. But, I did also anticipate a little bit of a pullback. So the third highly biased, too near the top, the smart money takes some profit. Stage 3, the herd stampedes into the market while the smart money takes the profits. The market moves up and down in erratic price swings. This is actually another short-term accumulation phase, typically above a wider value area. And then when we go out of that shorter term value area, we go into, keeping us, I think it makes more sense if I was to put a wider value area like on the side of this, it'll make more sense. So, if we say, look, this is the value that we've been trading against since February, this is the kind of stuff we've been seeing. And when you look at when you look at the charts and what's actually been happening and unfolding since, you'll see how this makes sense. All right, so we saw the stage 3 above value, and that was last week before Thursday, Friday sell-off on the ES. And then stage 4 came in Thursday, Friday last week. Stage 4, early stage 4, the smart money liquidates the long positions. They initiate short positions. The herd thinks the market is cheap and starts to buy. Right, the herd finally gives up. The smart money covers their short positions, and the buying, and they're covering into the buying short positions by buying into the herd selling. Right, now stage 1 then goes again, which is what we saw recently, after Thursday, Friday sell-off, and then we're going back into an early stage 2. So this cycle repeats itself. So when cycle 1 starts again, stage 1 starts again, we go back in stage 2. Now sometimes, and that's why I sort of change this around a little bit, I say it's an assumed stage 3 and it's an assumed stage 1, because sometimes from that stage 3, stage 1, we just keep going. It typically isn't the expectancy. You know, the thing is, there's no certainty in the marketplace. So you can only rely on expectancies and just ask yourself what's more likely versus not. That's just what I do. And, you know, I just try to figure out, and in a way, you know, they say hope and pray, but I just hope that, you know, what I'm thinking is the right thing. You know, that's just the reality of it. And, you know, as much as, you know, you've got to remain humble, but I think this provides, again, just like auction market theory and value trading, trading around balance, trading from low volume areas into high volume areas, again, it provides a story that you can have confidence in. So hopefully that answers that question. You know, I talk about, you know, I'd actually just show you guys, because I just showed a chart a little while ago about the ranges there with value that I tweeted up yesterday. And if you think about it, I mean, I'll just talk about stage analysis. Well, think about this. All right, there's a wide range of value there since February. All right, this is the E-mini S&P. There's 1, there's 2, there's 3, there's stage 4, there's a 1, there's a 2, there's a wide 3 there, and again 4, and then again 1, 2, stage 3. This has been a stage 1, guys, and why is the market going back up here? Early stage 2, going into a mid stage 2 right now, heading towards a possible stage 3 up here. I mean, I'm talking about that way ahead of time. Does that make sense, guys? Pretty straightforward stuff.
Okay. There's a bunch of questions, and I know we've gone long, so what I can do is get you the questions, and you can reply to these, you know, to the guys individually.
All right. Okay.
So I'd like to wrap it up with that. I know we've gone over for what people were expecting, and so we'll wrap it up with that. Do you have any final comments, Cam?
No, actually, I don't. You know, I just want to point out that ES is continuing to push up. I mean, you know, I put on Twitter that we should head towards 55.25. No real surprise, but at the end of the day, you know, I just want to say I've been expecting this push up. I was thinking about it even when we got down there on Friday. So
yeah, we're on the highs right
now. These things are not a surprise if you have a story behind it. You know, auction market theory provides a framework to do business around, and that's what you've got to remember. It's not a system. It's not something that's going to tell you specifically where to buy and sell. It's a way of understanding the market so that you can tell yourself a story so that you can have enough belief and confidence to do business. And that, I think, is the key. As long as you've got belief and confidence, that will then overshadow the doubts and the fears that typically get in the way of most traders' careers, you know. So,
yeah, that's a great point.
Focus on that, you know, you're heading down the right path. And, you know, if you focus on understanding the market better, making better sense of it, explaining it to yourself in such a way that, you know, you can feel confident in it, that's going to provide you a good foundation.
All right, well, those are definitely good comments there. One of the things, I know a lot of you guys were asking for chart defs or chart settings, and as he'd mentioned a couple times, obviously this is MarketDelta software that he's using, and he can provide chart definitions. I asked him ahead of time. Of course, you need the software in order to be able to run that, and you would need the market profile, volume profile enablement as well. So for those of you who have not had a trial, you can just visit MarketDelta.com and sign up for the trial. For those of you who have had a trial, we're offering a what we can do is provide a free red carpet setup, we call it. Basically, we'll log on, set everything up for you with a subscription if you subscribe. So we'll just set everything up, and you'll be up and running on day 1. And it really helps. We can even import chart definitions and just assist in making everything smooth for you. So for more information on that, or to take us up on that, give us a call or click our live sales chat. We'll be more than happy to help out. So thanks, Cam. I really appreciate the webinar.
It's been a pleasure. So thank you very much, guys, for joining in, and Trevor for putting this on. And yeah, we're doing another one at some point. You know, someone put a message there. Maybe do one on execution and market order. I'll be happy to do that. I'll talk with Trevor and you know, we'll put something together sometime, maybe for the summer or something.
All right. Well, thanks, everybody. Have a great, great rest of the day, and happy Easter.
Thank you. Bye.